Hello traders, and welcome to our new educational video. Today I'm going to be explaining something that is really important, that's going to be very beneficial to all of you. We have a price pattern that is called channels. Channels are like simply lines, or maybe we would say patterns, that would show up on the chart almost all the time, that could be very helpful to all of you. Now we have like three types of channels. We have a bullish channel, maybe, and we also have a bearish channel, and we also have a sideways channel that looks like this. Now all of these ones, in order for us to have like a valid pattern, we need to put like 4 important points. I would call them the key levels, or maybe the essential elements that could be seen, so that we can have these things. We have these patterns actually. Now let me explain. We need on each side, on each line. Now as you can see, we have 2 lines. The bullish one has 2 lines, the bearish one has 2 lines, the sideways one has also 2 lines. Now what we need is simply 4 points, 2 points on each side. So in this case, let me just clarify it to you. Okay, nice. We need 2 points here at this point, and 2 points at this point, at this level. So 1, 2. So we need 1, 2, 1, 2 on each side. This is very important. Now when it comes to this one, we need 1, 2, I mean respectively as follows. So 1, 2, 1, 2, 1, 2. The same goes for this one as well. Okay, so in this order, this is very important. Now let me clarify it to you. Okay, just like this. Look at this. From this to this, from this to this, respectively. Very important. Okay, so after the 4th one, so we have 1, 2, 3, 4, maybe 1, 2, I mean just count them the way that you want. Anyways, we have 2 ones on the upside and 2 ones on the downside, and from the 5th one we can trade just like this. Okay, then look at this. So we're done. The same thing goes for this one as well. Okay, now to trade this, now this is the structure of the pattern itself. Now this is the very basic one, and nothing is required more than this. Now in order for you to trade this pattern, you just need to consider one of two things, a rebound or a breakout. A rebound or a bounce means that when the price reaches one of these sides, then it goes back. For instance, just a minute. Okay, there you go. If the price reaches the upside, it goes downwards. If the price reaches the downside, it goes upwards, and so on and so forth. The same goes for this one, the same goes for this one. Nice. Now this is called a bounce or a rebound when the price reaches a specific level, it goes back home. As easy as this. Now the breakout is that the price does not respect the level and it goes beyond it. For instance, if the price like breaks through the downside of this pattern, then it continues going downwards. The same goes for the upside. If the price breaks through the upside, it goes upwards. So this does not show any kind of respect to the level, and as if that there is no level at all, and this would simply reflect that the domination, or maybe the dominators of the market at this time, would be the one who breaks through the level. So if the upside on any type of these patterns, if the upside is broken, this means that the dominators of the market are bulls, or maybe what we call buyers. If the downside is broken, then this means that sellers are the controllers of the market, the dominators of the market in this case, and they would simply control the market, and the market would continue, okay, in the direction. Sellers for sure have the downside. They would be very bearish. The market would be very bearish by then. Buyers, on the other hand, are those who would simply take the price higher and higher from a level to another one that is higher than the one before. So that's it. Now, as for your target and your stop loss are very easy. Now, there is something that is called the depth of the pattern, which is the distance between any two given points of this pattern. For instance, from 1 to 1, you just want to draw a line, whatever it is. If this is going to be like 100 pips, whatever, then this would be simply added to the broken level here, or maybe. So if this is going to be 100 pips, your target is going to be 100 pips. Now, usually the market does not reach its final target, so we only are going to be taking like maybe 80% of the final target. So if your final target is, I mean, you don't have to try to be very satisfied with these points, because this is going to be too much success when it comes to reaching 80% of the final target. So in this case, if your final target is going to be like 100 pips, then 80% would be enough. Okay, so yes, that's it. As for your stop loss goes like this. We're going to be following like risk reward ratio, which is going to be like, I mean, just follow this very simple, very effective rule, that is, your risk cannot ever be more than your target, your reward. So if you are like seeking, maybe if you are targeting like 2% of your capital, then in this case your stop loss can be even 1 pip more than this. Less is okay, but more than this is a huge problem. You will be touching this very soon, maybe after 10 trades or something like this. So in an accumulated way, you're losing money if your stop loss is more than your TP. Very important. So usually, as easy as this, your take profit is more than your stop loss, at least the same. But your SL, or your risk or stop loss, call it whatever that you want, cannot ever be more than your TP. I mean, in terms of pips or maybe money. So surely this would be reflected on the currency of your account. Anyways, an example on this would be like this bullish channel that we can see on the chart. We have a bullish channel. The market was trading at this point previously and started going upwards, and we expecting that the market would continue going upwards. Now, this is not a standalone tool. Don't depend too much on this pattern. Just try to use it with other things, maybe Fibonacci, maybe support and not the normal ones, support and resistance levels, maybe technical indicators, whatever tool, but this is simply not a standalone tool. It could seem as if it is like a strategy itself, but it's not actually. After I have used it many times, it's not going to be very effective when it is used as an individual tool. So that's it. I hope this helps, guys. Have a wonderful day. Thanks for being there.